Now all of a sudden, the bank's looking at us saying, hey, wait a second, your 3 biggest customers are gone, your sales are way down. I'm not interested in giving you money, like we used to. They just pulled back as quick as you can imagine. These are very, very high resolution picture frames.
Like many other business owners, Mr. Levy, whose company makes digital picture frames, found himself struggling for capital as the financial crisis unfolded in 2008. Several of his top customers, including the Sharper Image, filed for bankruptcy, and bank lending suddenly dried up. This is Andrew Martin reporting for the New York Times.
After Chase said no, I went to Citibank. I went to Capital One. I wasn't going to sit around waiting. They just tightened and boom, they just shut it off. Boom, just like that. This is all inventory.
With banks timid, Mr. Levy found an unconventional lender, Queens-based Hartsko Financial Services, which provides high-interest short-term loans to small and mid-sized companies.
It was the only way I was going to get the business. It was the only way I was going to produce the product that I needed for my business. So when you have no alternatives, the banks don't do it, so you got to go somewhere.
And that is where Richard Eidelberg of Hartsko comes in. Mr. Eidelberg peddles what is known as purchase order financing to companies that sell goods from olive oil to digital picture frames.
We're taking our equity that we have in our business and lending it to you for a short period of time.
Hartsko helps their clients by financing a purchase order, a written commitment from a retail customer to buy goods. Hartsko pays the factory to make the goods and covers the cost of shipping them. Once the goods arrive, Hartsko's loan is paid back.
We have to make money, we have to make money. It only works when everybody's making money.
Most loans are repaid in 60 days, but Hartsko's money isn't cheap. It's 3.5% for the first month and 1.25% for every 10 days after that, an annualized percentage north of 40%.
The most popular item that we sold in 2009 is our 12-inch.
Before, Mr. Levy was getting a more favorable rate from the bank.
The bank was charging 6-7% annually. It's, for lack of better words, it's almost like loan shark.
Eric Searles and Mark Cardinelli have purchased a private label children's clothing brand called Sprockets. They are hoping to sell the brand nationwide, but they need financing so the overseas factories will manufacture their clothing.
You hear about small business loans, and that's really the first place we started to look into things.
They initially went to a bank looking to obtain a more traditional loan.
You had to be at the desk when we were in one of the banks and having this conversation. I asked the question. I said, so tell me about everything I hear, and why is it that we're sitting here frustrated right now because we can't do this? And the answer was, well, you guys don't, there's not history, there's too much risk, and yet we thought that's what the small business loan was all about.
Earlier this year, the Treasury Department began tracking lending for the largest recipients of federal bailout money, and it showed a pronounced decrease in small business lending. The Small Business Administration has increased the number of loans it guarantees, and President Obama proposed $30 billion in new small business loans, but so far neither has had a major impact. Last year, Hartsko lent out $150 million, compared to $84 million in 2008.
But there are things that can happen. You're putting money out there that you're hoping to get back at the end of the day. We're left with about 69 pairs of lady sandals.
Since Hartsko funds the production of goods rather than lending money directly to their clients, it ends up owning the inventory if a deal collapses, like these women's sandals. Mr. Eidelberg said about 5% of his deals turn sour.
So there's a tremendous amount of risk in what we do.
But for Mr. Levy, Hartsko was one of his only options, and he recently took a $1 million loan with them to finance his next orders.
Yes, it cost me money, but without that opportunity, without the option to go to them, then it wouldn't matter. I'd make 0 on 0. If I can make some, a profit margin, that's a little slimmer, but on a larger volume, that's a good thing. Small business, without financing, we're done.